crisis in Turkey, subdued pound amid Brexit concerns, and FOMC meeting for the dollar. Good morning everybody and welcome to Rational Thinking. My name is Joshua and today we will be going through everything that we saw last week in terms of currency and what we can expect for the week ahead. So in regards to the pound actually had quite a subdued week last week. We had some really strong data, and given normal circumstances this would have caused the pound to kick on, but it really didn't given the ever-present dilemma of Brexit. Namely, we had unemployment figures at 4% and also retail figures at all-time highs. Now, this retail figures that were printed obviously attributed to the strong summer that we've had, encouraging people to go out and spend money, but you would have thought that considering retail sales are at an all-time high, output is subsequently higher, this would have a very positive impact on the pound, which it didn't, considering that there are still wholesale concerns around Brexit and the fact that there is the idea of a no Brexit deal is still very much a reality. So to kick things off this week, we're going to have to talk about Turkey. Now, although Turkey is not the world's biggest economy, in fact it's the 13th biggest economy in the world, the reason why it's such an issue is because there are potential contagion effects that could really cause issues in the global economy. Turkey itself was actually printed at a 14-year high for inflation at 16%. Now, the Turkish president has got quite a contrarian approach to global economics, whereby he doesn't see that a higher rate of interest will be able to control inflation. So inflation, in fact, has actually been moving steadily higher for quite some time now. Now, we've got with Donald Trump various import tariffs being placed on Turkey, which has caused a serious issue for Turkish companies that have debts in euro and dollar and subsequently making them a lot more expensive. The Turkish currency had a whirlwind week, massively rising and weakening off following these sanctions, but after Qatar's $15 billion investment into Turkey, these concerns were somewhat subdued, but nevertheless very much a real threat. Now, although this week we don't have much data out for the pound, it's always worthwhile bearing in mind that we've got the Brexit negotiations always continuing on in the background. Now, one of the biggest credit rating agencies, Fitch, have said that they are slightly concerned about the possible reality of a no-deal Brexit. Now, should this no-deal Brexit materialise, it would be safe to assume that rating agencies like Fitch may look at downgrading the UK's creditworthiness, which will only ever be negative for the pound. This week on the data front, again, what seems to be a quiet week for data publications. Nevertheless, on Wednesday, we will have the FOMC minutes printed for the US dollar. It will be very keen to see if the sentiment still remains widely the same from the previous FOMC meeting, whereby we are expecting a rate hike in September and another one in December. And that's all from me this week. Thanks for joining us. If you've got any questions or queries, please feel free to reach out to us. And otherwise, please like, comment and share. See you next week.